whole battle cry of buy the dip is a popular one, but when it comes right down to it, very few traders actually do it. What they focus on in the retail environment largely is buying higher highs, buying momentum. It feels better than it does to buy the dip. No doubt about it. And the difference between buy the dip and that popular saying, catching a falling knife, the difference is the trend, the context. So how to buy the dip and understanding the context, the importance of the trend. Now, buying the dip is only going to be something that I would liken to buying a pullback, buying a retracement in an uptrend, buying a retracement or bounce, or shorting, sorry, a retracement or bounce in a downtrend. The trend is the first thing to watch. And then for us, we use our JT multi. This down here is step number one, or using the grab candles, or whatever process you use to identify that a market is indeed in a trend. That's step one, because before buy the dip even becomes an actionable strategy, you've got to make sure it's a valid one. So the validity for buying the dip comes with the validity for the trend. So you'll notice RBOB, absolutely. Crude oil, absolutely. And one of the things I've been encouraging everybody to do when you have the ability to understand what's happening in commodities, don't limit yourself. Yeah, commodities and commodity options, futures, awesome. This is where I cut my teeth as a trader. But once you understand the perspective of commodities, I believe you have an unusual skill set in the world of stocks. I say unusual because what I really mean to say is better. So let me just own it. You will trade stocks better than a stock-only trader by a landslide. Because when you understand, and not all futures traders do, so I'm going to tell you right now what's going to separate you as a futures trader who could not only be a great futures trader, follow the trend, but also a better stock trader. One thing that futures indices traders could most definitely benefit from is that same buy the dip mentality, but where can you buy the dip? I don't believe dips are the valid, sort of buy the dip is the valid strategy for the S&P. It most definitely is not in the NQ. It doesn't mean that we can't buy, but it's most definitely not valid in the NQ. It's not valid in the ES. It's still barely, but valid in the YM. It is not valid in the RTY. So what I mean by embracing what you're doing when you're buying indices, selling indices, is just accept, I'm a stock trader. Accept that you are trading a bundle of stocks and understand relative performance in light of that, which means that your preferred index for dip buying is the one that's still pretty solid green, although we just got shaken up a little bit here with a blue grab candle and a slight transition to chop. But look at the steadiness. Now, the only way to really understand relative performance is, well, to understand relative. Look at the NQ. Look at the RTY. And I mean, look at the colors at the bottom of the screen. What we've done with this indicator is essentially given you a paint by numbers type approach to understanding the quality and the direction of the trend. There is no trend in the Russell. There hasn't been since the 23rd of March. There is no trend, although there is some directional bias, but there is no trend in the NAS since the 4th of May. Directional bias is still bullish, don't get me wrong, but there's no longer a trend, which means there's no buy the dip application. The S&P does not have a trend, but if you're going to buy the dip in the S&P versus the NAS versus the Russell, you're better off looking at the S&P. So it's my second favorite index. My first, and I mean by a country mile, is the Dow. It just barely flinched on the volatility that we're seeing. Crack open the Dow and it will lead you to XLI. It will lead you to IYT. It will lead you to healthcare, which, by the way, you want to grab a relative outperformer in healthcare, either at the sector level, the tide, or individual boats. This is where you go shopping. Financials, also heavily weighted not only in the S&P, but the Dow. This is where you go dip buying. So if there's anything that we want to take away is how to buy the dip, find the trend. The context of the trend is what validates it. And then also, one of the things that we've been doing a lot more here in this room is avoid talking broadly the markets, right? The market is down. What does that even mean? It means nothing in the context of the mixed environment that we're in when we're not in the buy everything mode of 2020. Avoid talking the market. Be specific, right? Down to the sector, down to the industry, down to the stock. Be specific. There are relative outperformers in this market. It just isn't going to happen if you're somehow myopically and relatively obtusely focused on tech. There's really not the same opportunity there as there is in healthcare, financials, transports, industrials, and the Dow. The S&P is going to benefit from the strength in healthcare and in financials, but it's always going to struggle until the NASDAQ, or specifically the XLK, starts gaining some traction. And at some point it will, but that's not where the relative outperformance is. So what is dip buying? Find the context of the trend. Double green. Wait for a pullback. That's what we're getting. Find the relative outperformers. It really actually is that easy. That's where the probabilities are. So I hope that makes sense, because days like today, I want to go shopping, right? This is the blue light special. I was joking this morning in Charts and Coffee that I need a blue light, one of those spinning blue lights here in my office to start spinning when we have these blue light special days. My bigger problem is I've already bought dips. We've already got a number of positions like financials, like healthcare, longer term swings. And my issue is I don't want to get too heavily positioned right now. And so I've got to be a little bit more discerning. We'll talk a little bit more about that in the premium video. But this is where we want to keep our focus. You do this. Look, I can't guarantee or promise anything, but I will tell you this. You will be on the higher probability side of the market when you work this sector index stock relative outperformance and focus on trends, uptrends specifically.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me